What's up, fam? Hope everybody is well. Welcome back to another lesson. For today's lesson, we are going to be covering key levels, specifically key levels as a whole, because you guys probably think key levels are just one thing. So going to be going in depth on key levels, and per usual, if you guys haven't watched the previous masterclass lessons, be sure to go and lock in with those as well. But other than that, going to hop straight on into this lesson. Going to be a solid, quick, amazing lesson. Amazing, just like all the other lessons. But let's go ahead and get started and hop onto the chart. So let me extend this out here. So perfect, boom. So on the chart. So like I mentioned earlier, key levels are more than just one thing, right? You know, some people probably think of key levels as just one area or one certain spot on the charts, but key levels can be more than just one thing. And to start it out, I put first that right here, just for you guys to kind of get an idea of what our key levels are, why we exactly draw them out. Key levels are pretty much an area on the charts that is presented with A, excessive buying, or B, excessive selling, then leading to some type of strong reversal or strong bounce. Obviously, we as traders want to make sure that we understand where those reversals slash bounces are going to be, to make sure that we are getting the best entries and exits within our position. So that's why drawing out our key levels always, and understanding where our key levels on the charts are always going to be a very important thing. So I went ahead and I went ahead and labeled out 5 key things that I want to go over with you guys on key levels, the 5 main things that you guys should look for. So let's go ahead and get started. So as I mentioned right here, first, key levels are simply just areas on the charts that are likely to present us with a reversal, a pretty strong reversal due to the excessive buying or selling. Now, one of the key levels that us as traders can utilize, especially you guys, trading and learning for me, is going to be supply and demand, something that I trade with every single day, something that I use every single trade. Supply and demand is going to be everywhere on the charts, right? And it's also going to be something, like I mentioned, that I teach all of the time. So having your supply and demand zones are going to be very important, just in terms of understanding where high amounts of supply and where high amounts of demand are going to be on the charts. So that's going to be number one. Very important is, of course, always understanding where your supply and demand areas are going to be. Because also, like I mentioned, our key areas are simply just areas on the charts that are likely to present us with a reversal. 2, we have our fair value gaps. So our fair value gaps, obviously, just going to be imbalances on the charts that are pretty much going to be many supply and demand zones pretty much for us. So just like I mentioned for our supply and demand zones, we mark them out because they're simply just areas on the charts that are likely to present us with a reversal. So fair value gaps are going to be the exact same thing. So that is going to cover up number 2, which is just simply going to be always having our fair value gaps marked out and charted out for us, whether they are bullish fair value gaps or bearish fair value gaps, either one, and making sure that we are, of course, marking out those fair value gaps on multiple different time frames to make sure we can actually get the strongest confirmation. So that's going to be number 2. Now, going on to number 3 is going to be support and resistance. So keep in mind, these are all just going to be labeled as a whole. There's not going to be one key level that's going to be more important than the other. These are all simply marked out because these zones, these areas, are simply just areas that are likely to present us with a reversal on the charts And that is exactly what key levels are. So that's why we look for things like these. So support and resistance, just simple support and resistance areas. I marked out an example right here. You can see we have an example of resistance being created here on the charts. You can see price was respected right here, and then initially we had this strong push to the downside off of the excessive selling pressure that we had at this resistance area that of course was created right here. So that's going to be that, and wrap up number 3 is of course going to be our support and resistance areas, that of course are obviously going to provide us with a potential reversal as well. Now, moving on to number 4 are going to be our order blocks. Now, if you're not too familiar with order blocks, these work very similar to our supply and demand zone areas. They're pretty much like baby supply and demand zones. That's kind of like how I think of order blocks. They work exactly like supply and demand zones. They kind of just have a different concept behind them. But of course, order blocks are simply just areas that are likely to provide price with a potential reversal as well, and that is exactly what key levels are. So that is of course going to be on this list in terms of key levels that we should be aware of on the charts at all times. And of course, like the fair value gaps, like the supply and demand zones, we want to make sure we are marking out our bullish areas and our bearish areas, making sure that we are marking out as much as not as much, but making sure we are marking out as key areas as possible, because the more key areas we have marked out, the more we are able to understand the charts and understand where price is likely to have a certain reversal or a certain move at what spot. So that's going to be that. So that's going to wrap up number 4, and then moving on to number 5 is going to be our strong highs and lows. Now this is going to be pretty similar to support and resistance, but just key things like when you see probably your pre-market highs or your pre-market lows, those are going to be your strong highs and lows. Or just when you see price creating strong highs and you see price failing to break those highs, that is price creating strong highs, because price is struggling to break above those highs. So that area then becomes a barrier area for us, a resistance area. So that's exactly what the strong highs would be, and vice versa for the strong lows. Simply just areas on the charts where price is failing to break below, but of course those are where our strong lows are going to be created. But that's going to be that. Those are going to be the 5 different things. Of course, there can be more on this list, but these are really the 5 key things that I myself, look for. There could be different things, like I mentioned, like equilibrium or, different things. However, every trader is different, so they look for different things. But just simply understand that key levels are just simply areas / zones on the charts that are likely to provide us with a potential reversal. So anything that you label that can provide price with a potential reversal is going to be in that key level category. So that's going to be that. Just a simple video on the things you should look out for and what actually consists of a key level. But other than that, if you guys do have any questions, please feel free to DM me or let me know in the Discord. Other than that, family, make sure you catch up with the previous masterclass lessons, and I will see you guys in the next one. Much love.